Wagwan, wagwan, wagwan. It's Double D, Don Darius, your quintillion coach. I'm not the GOAT, but I fit the description. And, well, peace, love, and blessings to you watching this on the other side of the screen. If this is your first time on the channel, please go ahead, leave a like, leave a subscribe, and go ahead and take a pen and pad because you're going to get a lot of value from this video. And if you are coming back and this is not your first time, I would like to welcome you back. Peace and love, man. In this video, we are going to be breaking down exactly what is technical trading, right? Technical trading, most of the time people can't give you a definition and say that it's buying or that it's selling, and they leave loose terms and whatnot. But in this video, we're going to be answering a couple of specific questions. So the first one is going to have to be, what is technical trading? So now, I bet you're wondering, what is technical trading? So technical trading, aka technical analysis, is a method of evaluating financial securities or financial instruments, such as stocks, currencies, or commodities based on their historical price and volume data. It involves the use of different chart tools and trading techniques to identify patterns, trends, and signals in the price charts to make trading decisions, right? Now we go to question 2. How does technical trading work? Okay, so how does technical trading work? Technical trading basically relies on the belief that historical price and volume data can provide insights into future price movements. So then traders use different types of technical indicators, chart patterns, and statistical tools to then analyze the price data and identify potential buying or selling opportunities. These indicators and patterns are based on mathematical calculations and statistical models aiming to predict price direction and potential entry or exit points. The third one is, what are technical indicators? So, what are technical indicators, right? Technical indicators are basically mathematical calculations based on historical price and volume data. Right, that data then helps traders analyze and interpret market trends. So examples of technical indicators include the moving average, oscillators such as the relative strength index or the RSI, the RSI, the MACD, which stands for moving average convergence and divergence, right? Then maybe you can look at your Bollinger Bands and many other technical indicators that you guys may be familiar with, right? Or you're not familiar with and you're just getting to know right now in this video. So these technical indicators then provide visual representation of price patterns, momentum, volatility, and other market characteristics. Right? Things for the traders to then read off of the market to then understand what the market is telling them to do. But the issue with indicators is that sometimes the signal happens only after the indicator has told you, but sometimes the price data and the candlesticks are telling you what you need to know, but that's for a different video, right? Now we're going to be answering the question of, what are chart patterns? Okay, so now we're basically going to answer the question of, what are chart patterns, right? So chart patterns are easily recognizable formations or shapes that appear on a price chart that can provide insights into potential future price movement, right? Common chart patterns then also include maybe your triangles, the flags, pennants, and, the rising wedge and falling wedge. Traders, right, have to study these patterns in order to identify potential trend reversals, breakouts, and continuation patterns, which can help in making trading decisions. Now we answer the question of, can technical trading predict future prices accurately? Okay, technical trading does not provide guaranteed predictions of future prices, right? It is based on probabilities and historical patterns rather than certainties. So don't go risking your whole rent money or your mother's pension. Technical analysis assumes that price movements are not entirely random and that historical price patterns may repeat. However, other factors such as fundamental analysis, market sentiment, and unexpected news events can also impact price movements, making it challenging to predict future prices solely based on technical analysis. What are the advantages of technical trading? All right. So, taking a look at the advantages of technical trading, right? The first one is that it helps with objective decision making because technical analysis relies on mathematical calculations and objective data, which then reduces the impact of emotions and personal biases on your trading decisions, right? Less emotions, more logic, right? Number two is that it is helpful when it comes to the timing of entry and exit points, because technical analysis can help identify potential or high probability entry and exit points, which then allows a trader to then define or rather time their trades more effectively. You get me? The third one is that it helps with visual representation because technical charts provide visual representation of price data and movement, which then makes it easier to spot trends, patterns, and potential entry points or trading opportunities. The fourth one is that it is widely used, you understand. Because it is widely used, technical analysis then means that there are multiple resources for this. There are multiple tools and there are multiple materials available to then help you make a decision when it comes to trading or entering a position or learning something new, you understand? What are the limitations of technical trading? So, some of the limitations that exist when it comes to technical trading is that it's a limited scope, right? By virtue of it being a limited scope, it means that technical analysis only focuses on historical price and volume data, ignoring fundamental factors such as company financials or news events or the overall market sentiment, because you're looking at one aspect of the entire environment. You understand? And this can then have a significant impact on prices and your trading portfolio. The second one is the interpretation of challenges, you understand? Technical analysis requires interpretation of indicators and patterns, which then can be subjective and can vary among traders. You can see what you see, I can see what I see, she sees or he sees what he sees, and what we all see can make sense but then can be the wrong idea, or two of us can see. It's subjective. It means something to somebody. It doesn't mean something to everybody, right? Now, with this, then different traders can then draw many different conclusions from the same data. It's crazy. The third point is that it can sometimes generate false signals, because technical indicators do generate false signals. Nobody's going to tell you that the indicator that they use is 100% accurate and that every time it produces a buy or a sell signal, that's the way it goes. It doesn't always go that way. So, it's false signals, false signals where you then expect for price movement to not occur. It does not occur, which then can lead to potential losses within your portfolio, such and such. False signals, sucky stuff, man. The next one is that sometimes technical indicators can lead to market inefficiency, right? Which then means if a large number of traders are solely focusing on one technical analysis or one form of analysis, is that it can lead to self-fulfilling prophecies, right? Where patterns and signals become less reliable due to the market participants acting on the same information, right? Sometimes there are new people investing in the market based on old patterns, and then there are some old traders who are exiting based on the same pattern. So it's crazy, man. Sometimes it doesn't help because, like I'm saying, with technical analysis, the bad side of it is that you are only looking at one aspect of the entire environment, right? So now we go to answer the last question. Is technical trading suitable for all traders? So now we're gonna basically be answering the question of, is technical trading suitable for all traders? Personally, I wouldn't say that everybody should trade technical analysis or everybody should hop on technical analysis. All I'm just gonna say is that if it's interesting to you, right, then take the time to learn about it. And because now technical trading is not suitable for all traders. Some traders may prefer fundamental analysis, which focuses on looking at the financials of a security, the data reports, looking at the paper side of it. Fundamental analysis is looking at the news and other things that make it move. Not technical analysis. Technical analysis is watching it move, watching it change, while the report is just waiting for change. So I personally, if you are into technical analysis and you like watching charts and you see yourself developing the skills to better be able to read what's going on in the charts, then man, go for it, bro. It's a matter of personal preference. If you do want to learn how to better read charts and elevate your trading game, then go ahead, man. Subscribe to the channel. Follow the links that are in my description. You'll get to connect with the Telegram group that we have running for the Bears, Bulls, and Pips. Then we also have the Instagram page, more content coming on the way. And yeah, man. Okay, if you've made it this far into the video, I really, really hope you got some value and you have gotten something that's going to help you maybe reach that next level in your technical trading journey or understanding in your technical trading journey. With love, it's been real. Double D, Don Darius. You're telling the coach, I'm not the GOAT, but I fit the description. Wait, I said I fit the description. Hey, it's Double D, Don Darius. You're telling the coach, I'm not the GOAT, but I fit the description. Said I